September 6th, New York. Reuters. The statistics revealed that U.S. employment expanded less than anticipated in August, but it still demonstrated a continuous decline in the labor market, which likely supported the Federal Reserve's decision to gradually lower interest rates. This news caused the dollar to rise in volatile trading on Friday. Following an upwardly revised 89,000 increase in July, non-farm payrolls climbed by 142,000 jobs last month, according to data released on Friday by the Labor Department's Bureau of Labor Statistics. Reuters polled economists who predicted payrolls would rise by 160,000 jobs following July's previously announced gain of 114,000 jobs. Following the release of the jobs data, the dollar dipped versus most of its major counterparts, but it quickly gained ground and began to trade higher. The traditional safe haven of the U.S. dollar gained strength on Friday as stocks and other riskier assets fell. The euro hit a high of $1.1155 immediately following the announcement of the payrolls report, but it ended the day 0.3% weaker against the dollar at $1.108225. The U.S. currency's strength in relation to 6 major counterparts is gauged by the dollar index, which was up 0.2% at 101.21. Head of U.S. rate strategy at TD Securities, Janae Goldberg, stated, "I think the market's really struggling with this one because it's really in the middle of what could be used as a justification for either a 25 or 50 basis point rate cut." According to LSEG data, traders now anticipate a 31% possibility that the Fed would lower its policy rate, which is now in the 5.25% to 5.5% band, to a 4.75% to 5% range at its forthcoming meeting on September 17th to 18th. They had estimated a 43% possibility of such result prior to the news, but they preferred a quarter-point drop. The U.S. economy looks more likely to gouge the runway in the months ahead, justifying an increasingly aggressive response from officials at the Federal Reserve, said Carl Shimoda, chief market strategist at payments company Corpay in Toronto. A half-point rate cut at the central bank's September meeting remains unlikely, but today's release provided clear evidence of a sharp deterioration in labor market fundamentals and will bolster bets on at least one jumbo-sized rate cut in the coming months, he said. Against the Japanese yen, the dollar fell 0.7% to 142.42 yen, on pace for a fourth straight session of losses. Safe haven demand and expectations for imminent rate hikes from the Bank of Japan have helped support the Japanese currency in recent sessions. Traders have sold the dollar against other currencies fairly consistently over the last couple of months, as concern has risen that a slowing U.S. economy will require chunky rate cuts. Federal Reserve policymakers on Friday hinted they are ready to kick off a series of interest rate cuts at the U.S. Central Bank's meeting in 2 weeks, noting a cooling in the labor market that could accelerate into something more dire in the absence of a policy shift. Fed Chair Jerome Powell signaled that the central bank's focus was shifting from fighting inflation to preventing deterioration in the job market when he strongly endorsed an imminent start to the monetary easing cycle at the annual economic conference in Jackson Hole last month. The pound was about 0.4% lower at $1.3131. The Bank of England meets in 2 weeks to set monetary policy. Right now, the derivatives market shows traders see very little chance of a rate cut this month, but a quarter-point cut is fully priced in for November. In cryptocurrencies, Bitcoin fell about 4% to a fresh one-month low of $53,600 as investors avoided riskier assets. I appreciate you paying attention. With a potential interest rate cut looming, the stock market is being rattled by the jobs report, and things are only going to become more intriguing. For more updates on the markets and economy, don't forget to subscribe and press the like button if you thought this analysis was informative. Please share your opinions on how you believe the markets will be affected by a reduction in interest rates in a remark. I'll see you in the upcoming video, so keep your skills up.